Hey traders, Samantha here, and I've got a simple and yet game-changing scalping strategy with huge win rate. No time to waste, let's dive into the video and change your trading game forever. For this scalping strategy, I'm using three types of exponential moving averages, the 25, 50, and 100 periods. I'm going to be using the 5-minute time frame. This is how the strategy works. The first step involves identifying an existing trend by examining the EMA. All three lines should align in the same direction and maintain some separation as demonstrated here. It's important to avoid ranging markets where the EMA moves sideways, and also markets with lines crossing each other. The goal is to ensure consistency with all three indicators pointing in the same direction. The candle arrangement is crucial. Aim for a setup where the candles are completely outside the 25 EMA, as demonstrated here. Once you've spotted this arrangement, the next move is to identify our entry signal, which occurs when the price pulls back and closes below the 25 or 50 EMA. Let me give you an example. In this chart, we've identified an ongoing uptrend, highlighted by the upward movement of all three EMAs, with candles situated above them. Following this, patiently wait for the price to experience a pullback towards the 25 or 50 EMA, setting the stage for our entry setup. The next step involves waiting for the price to revisit the 25 EMA. Once this occurs, you are taking a buy position here. However, if the price goes down and breaks below the 100 EMA, cancel the entire setup. Look for alternative trade opportunities, as this could signal a shift in the trend. Now for your exit strategy. So let's say you took a buy position here. You want to set up your stop loss at the 50 EMA, and for your profit target, you set it at 1.5 times your stop loss. So here's an example of the strategy in action. In this chart, the current market trend is upward, evident in all three EMA ascending, with candles positioned above the EMA. Following this, we anticipate a pullback towards the 25 or 50 EMA, ensuring it doesn't cross below the 100 EMA. Once a pullback occurs, the next step involves waiting for the price to reverse back up to the 25 EMA. Upon this reversal, initiate a buy position, set up your profit target and stop loss, and as observed, the price successfully reaches our profit target, marking this trade as a success. Let's look at another example. In this chart, we observe an ongoing downtrend indicated by the downward movement of all three EMAs, with candles positioned below the EMA. Following this, we anticipate a pullback towards the 25 or 50 EMA, emphasizing that the pullback should not overlap with the 100 EMA. Once the pullback occurs, we patiently await the price to return to the 25 EMA. Upon this reversal, take a sell position, establish your profit target and stop loss, and as evident, the price reaches our profit target, marking this trade as a success. This outlines the approach to trading using the triple EMA scalping strategy. Now, as a bonus, let me share another highly effective scalping strategy with you. For this specific approach, I'm using a mix of RSI, the 200 EMA, and the engulfing pattern. First, you need to change the settings for the engulfing pattern to no detection. Next, for your RSI, you want to set it above 50. So now you have a signal line in the middle of the RSI. Next, we're gonna be using the 1-minute time frame. For your entry setup, if the price is above the 200 EMA while a candle displays a bullish engulfing pattern and the RSI is above the 50 line, initiate a buy position. Similarly, for a short position, if the price is below the 200 EMA while a candle exhibits a bearish engulfing pattern and the RSI is below the 50 line, initiate a sell position. Now for our exit strategy, once you've entered a trade, you want to set up your stop loss below your entry candle here and set your profit target at 2 times your stop loss. So now let's look at this strategy in action. In this chart, the price is above the 200 EMA, indicating an uptrend. Therefore, we focus solely on signals from the bullish engulfing pattern. Bullish engulfing pattern emerges, the RSI is already above the middle line. This serves as our entry signal, prompting a buy position. Set your stop loss below the entry candle, and for your profit target, place it at 2 times your stop loss. And as we can see, this trade proves to be profitable. Let's look at another example. In this chart, the price is below the 200 EMA, indicating a focus solely on signals from the bearish engulfing pattern. Next, we observe a bearish engulfing pattern and the RSI is below the middle line, prompting a sell position. Following that, set your stop loss above your entry candle and for your profit target, place it at 2 times your stop loss. This trade proves to be profitable. Now let me share 5 extra tips to enhance your scalping skills. First, selective trading. In scalping, you might encounter numerous entry signals. It's crucial not to take every trade but rather focus on ones you can manage. Handling multiple trades simultaneously, especially in scalping, can be challenging. Second, capital management. Avoid risking too much capital. It's advisable not to exceed 1% of your total capital per trade. I suggest limiting the risk to 0.5% for each trade. First, strategic breaks. Recognizing when to halt trading is essential in scalping. Prolonged trading sessions can lead to fatigue and loss on focus. Knowing when to take a break is crucial, with confidence that other opportunities will arise. Fourth, low spread brokerage. Opt for a broker with a low spread. This aspect holds significant importance in scalping, where every pip matters. Using a broker with a narrow spread is vital for maximizing profits. And lastly, single currency focus. Stick with one currency pair. In scalping, entry signals frequently emerge, making it unnecessary to worry about missing signals from other pairs. Choose a pair you're comfortable with and stay committed to it. So we just unlocked 2 winning scalping strategies for you, ready to put them into action. But first, a quick favor, hit that like button, subscribe in just 2 clicks, and join my Telegram for free signals. To trade this strategy, we need to add 3 moving average indicators. Let's add them. Take them out. The first indicator will have a period of 25. Choose the color of the line. Let's add the second indicator with a period of 50 and also change the lines. And the third indicator with a period of 100, change the color and save. Let's use a time frame of 30 seconds. For the 30 seconds time frame, we need to change the expiration time to 2 minutes. Okay, let me remind you that all 3 indicators should be pointing in the same direction. Okay, let's take a look at the chart and find the right time. As we can see, we have already had a touch of lines on this chart, and the trade is already missed at this point. We have no entry point for the trade. If the green line closes above the green line now, we can open a trade on the upside. Let's hold on. All 3 indicators are showing a rise. Let's wait for the candle to close above the green line and open a deal on the upside. So the deal is open. So the trade is closed, we're still in profit, so now let's take a look at the other charts. So on this chart, we've already missed a trade, not to worry. And here's another good point. If the price rises above the green line and closes, we can open a trade on the upside. As you can see on this chart, the price has already given 4 entry points. So not a bad momentum. The moving average is showing us upside now. It's about to close above the green line and we're going to open a trade on the upside. Okay, the trade is open. Let's wait and see what happens. And yeah, the trade closes profitably and we take our profit. While we are watching the other chart, our trade here was the moment for the entry point. As you can see, the price touched the line and flew up. That's a good moment. If we have price going higher and it closes above the green line now, we can open a trade to the upside again. Let me remind you that the price can touch the middle line, for example, the moving average with a period of 50, but it must not cross the moving average with a period of 100. So we can see that the price has already exceeded the green line. For example, the moving average with a period of 25. As soon as the candle closes above it, we open a trade on the upside. We're getting ready and the up trade is open. Let's zoom in on the charts and see what's going on. There was a little bit of momentum, now it's pulling back, but we still got our profit. So that's it and thanks for watching.